Buying a home is the largest purchase most Canadians will ever make in their lifetime. As of mid-2022, with rising interest rates driving up the cost of borrowing, it has become even more difficult and expensive to have a mortgage. Canada's mortgage stress test requires buyers to prove that they can manage their regular payments, at rates well above what lenders are offering. This rate is typically higher than the actual rate in your mortgage contract. In essence, all insured mortgage holders and uninsured mortgage holders who get their mortgage with a lender must pass the test. Credit unions and other lenders that aren't federally regulated may also ask you to pass the mortgage stress test. Initially, this test was introduced to give buyers more breathing room if the low interest rates they were borrowing at began to rise. The current stress test rules require borrowers to prove they can handle either the minimum qualifying mortgage rate of 5.25%, or their contract rate plus 2%, whichever is higher. For example, if the bank is offering you a rate of 5.60% for a 5-year fixed-rate mortgage, then the bank is to make you qualify at a rate of 7.60%. If we take an example of pre-COVID times when rates were low, suppose the bank was offering you 2% for a 5-year variable mortgage, then the stress test was at 5.25%. You'll have to undergo the stress test regardless of whether you opt for a fixed or variable rate mortgage. If you already have a mortgage, you'll still need to pass this stress test if you refinance your home, switch to a new lender, or take out a home equity line of credit. How does the stress test affect home buyers? By requiring buyers to qualify at a higher rate than they're actually being offered, the stress test makes it more difficult for Canadians to get a mortgage. It can reduce the mortgage amount you qualify for or require you to save more money for a larger down payment. The stress test tends to disproportionately affect those who are just on the margins of qualifying, who are typically buying the most house they can afford, and that's a lot of people. According to the CMHC's 2021 Mortgage Consumer Survey, 65% of buyers paid the maximum price they could afford to buy their home. How have rising interest rates affected the stress test? Recent rate increases show the huge impact that the hikes can have. The Bank of Canada, in an effort to tame rising inflation, made a series of interest rate hikes in 2022 and 2023. After 2 years of rapidly rising housing prices, rate hikes have started to cool the market. But they've also sent borrowing costs soaring and made the stress test much harder to pass. The minimum qualifying rate of 5.25% is no longer a factor because it's less than the lowest contract rates available on the market plus 2 percentage points. According to recent data, Vancouver buyers need to make a minimum of $232,000 a year to afford a home in the city at a fixed mortgage rate with 20% down. Toronto buyers need to make roughly $226,000 a year to qualify for a mortgage. If rates keep climbing, as many in mid-2022 are expecting them to, then the stress test will become progressively tougher for borrowers. In the present scenario, it is getting next to impossible to get qualified for a mortgage with a single income. Adding a joint applicant or additional co-applicants, who have decent annual income, can make the numbers work in your favor. Feel free to drop your questions in the comments section. Thank you.